Welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts and share my proprietary safe wheel strategy for free. So let's get started here. First, I'm going to start with the earnings edge. Also, let me know my audio is working. Post in the comments there that my audio, my video, everything's working okay. And be sure to post any questions that you might have before the end of the broadcast. I like to get to all the questions, and sometimes they kind of come in at the last second and I miss them. So be sure to post those questions earlier rather than later. All right, let's talk about the earnings edge, what happened last week. Let's see here. Scott says the sound is good. Thank you, Scott. Okay, earnings edge. What happened last week with the earnings edge? I did not trade anything. Nothing fit through the filters. We're not really in earnings season. So a lot of times when we're not in that heavy earnings season, the stocks don't fit through the filter, and I'm not just going to make bad trades. Let's look at the spreadsheet, see where the, well, first of all, let me see where the account is. $6,400. And I don't think there's going to be any changes. Yeah, $6,400. Let's see what SPY is trading. SPY is 605.95. That's down a little bit over the week. 605.95, just a little bit. We can see with the last trade I made there, Costco, you can see my win rate, 54%. My wins and losses are getting equalized here. 651 on the wins is my average win. 622 is my average loss. 54% win rate. You can see I had a really good 2022, had a decent 2023, underperformed, and then in 2024, underperforming by pretty significantly. The last probably 3 or 4, maybe 5 trades were not winners, or maybe just break evens or small wins, but hit some losses in a row. So we're kind of going through a losing streak here. You can see that since the beginning of 2022, I'm pretty much equal on a nominal basis with the S&P 500. The S&P 500 is up about 27.5%. I'm up about 28% with this particular account. It was up over 100% at one point, but it hit a little losing streak there, and that's what happens with the system. You got higher risk, higher reward, and what we want to happen with the earnings edge is when we get into a position, we need the stock to move. And recently, over the last month or two, this market hasn't really moved a lot one way or the other. It's been relatively slow in its movements, and that's been reflected on the underlyings that I've chosen. They've also been not moving a lot, and when they don't move a lot, I don't get that bang for my buck for the earnings edge. But this is probably the biggest losing streak I've had, so a lot of times after a losing streak, you might have winning streaks, maybe, but that's what's going on with the earnings edge. Let's talk about the Premier Level 5 Pro. What's going on that? Now this is my larger account. Let's see if I can get to that one. This is where I have a majority of my liquid net worth invested. Let's see, this is going to be 527. 527. 457,835. This keeps moving. 457, let's call it 625. 457,625. That's how much is in the account, 457,625. Okay, it's up a couple $1,000 this week, or I should say over the last week. Started this PL5 Pro. What happened with this PL5 Pro is I had the PL5, which is doing really well. We hit that market where the market didn't move much. It went for maybe 6 or 8 months without more than like a 2 or 3% pullback. I need volatility. The PL5 Pro needs some volatility. Obviously, sometimes in an up market, you don't get that volatility. And so I had to tweak the system to the PL5 Pro to compensate for that. And I started the PL5 Pro. It took me about probably 6 months to figure out how to tweak the system. So around July 19, 2024, or exactly on that date, I actually started the PL5 Pro live in my account. I started with about $403,907. Now my account's up to 457,625. I'm up 53,000, almost $54,000. I'm up 13.3% since July 19th. Now the market has been on a tear this year. I mean, it's up 28, almost 28% this year, but it's up 10.3% since that same time frame. So I'm up 13.3 versus 10.3. So I'm still outperforming the market. And when the market goes sideways or grinds down or crashes, I'm going to vastly outperform the market. It's tough to outperform the market in a bull with just the PL5 Pro system, but it still hangs in there. As you can see, it's actually outperforming in this bull market. Okay, let's talk about the PL5 Pro, Premier Level 5 Pro S&P 500 variance. Okay, this one's tied closely to the S&P 500, and this is the one where I use my $30,000 account. And let's see what my account, I can't bring this onto the whole screen because it'll show my account number, unfortunately. So I'll just bring it partially onto the screen here. My Interactive Brokers account, you can see that it's worth $32,976. 32,976. So it's up just 20 bucks from last week. 32,976. Started this account also in the middle of July because I'm using the PL5 Pro, right? So that's when I started the Pro in the middle of 2024 to compensate for that up market without any volatility. And so I made a tweak to the system at that time. Now I've got the Pro. And on July 16th, 2024, since then, the market's up 7.58%, and the PL5 Pro S&P 500 variant is up 9.92%. So this is outperforming the S&P 500, and it should. It's designed to outperform. It's going to go down when the S&P 500 goes down, but it's going to eventually still outperform. Where as opposed to just the PL5 Pro itself, isn't necessarily, it'll go down on that first leg, but it'll recover very quickly and outperform on a down market. With this variant, it's not going to outperform very quickly with the down market because it's a very highly closely tied to the S&P 500. That's why it's called the S&P 500 variant. So this is up $2,976 since July 16, 2024, starting with the $30,000 account. Okay. So the PL5 Pro is doing what I expected it to do. It's hitting its expectations, which is good. It's been back tested very thoroughly, and it does what I expect it to do. I'm not surprised about any of the results with the PL5 Pro. All right, let's talk about the Safe Wheel. Let's get into the Safe Wheel now. Let me get into the right account. This account here, the Safe Wheel has 5401. 5401. The Safe Wheel's been underperforming lately also. Oh, 5401 is what it was. Wow, it's exactly what it was a week ago. So I have the same results. You can see that what the Safe Wheel did in 2022 when the market grinded down 20%, it was up 20%. So it outperformed by 40%. And then we had the 2023 where the market was up 24% and the Safe Wheel is only up 5%. And you can see where the market's up 27.5% this year. And actually the Safe Wheel is down 15.7%. And overall the Safe Wheel is underperforming. You can see it's up 8% versus 27% since the beginning of 2022. It does have about only half the drawdowns of the S&P 500. So you might be able to double this 8 to 16 on a risk adjusted basis, but still underperforming. And I expect it to recover here. We've had some bad patches here recently, same as the earnings edge. So the Safe Wheel and the earnings edge have underperformed recently over the last few months. But you can see the results there. I'm not going to hide the results or try to change the results or try to hide them in some way and only show you my winning trades and hide my losers and all that kind of stuff. I don't do that. I show you the real net liquidation, right? Not other things that make me look good or whatever. I mean, you're going to get the real net liquidation numbers here in this, in my live streams. And you can ask me any questions you want about trading or about options or anything, I'm right here live, right? So I'm not shying away from anything that I do. And I just want to make that point. So when I underperform, you're going to see that with what other systems that I'm running. Okay, so I've got to trade the safe wheel now. So let's do that because I've been trading this live. Let's see. This is the account. Let's go here. Let's take a look at what my positions are. So I'm running the wheel strategy, but I'm running it with a hedge, right? And I call it the put hedge, and I've hedged at the $20 put. So I got in here, I sold the $24 put last week, and I got assigned. Okay, it's because LI went down to 20. Now it's at 21.84. So let's call it around 22 bucks. So what happens with a wheel is if you sell at the 24 strike sell a put, you can get assigned at $24, and now I own 100 shares because I did one. And I also have a hedge. So you can see that my hedge is up about $166, and you can see that my net liquidation on my position for LI is down 217. So the hedge is covering me, not all the way, but covering me pretty good. If I didn't have that hedge, I'd just be straight up down $217 right now on a net liquidation basis on my open positions. But now I have these 100 shares, and I'm going to stay with these 100 shares. I'm not going to try to get out. Now, one thing with the wheel is you don't want to sell something. I'm at the $24 strike here. I don't want to sell a call. I'm going to try to sell a call, right? But I don't want to sell one lower than the cost basis of $24. Because if I do, I can end up taking a loss on the overall position. But so the system is set up to compensate for that. So let's talk about managing. The first thing I want to do is manage my put hedge. So I have a couple questions about my put hedge. Number one, do I own 200 shares? The answer is no. So I don't see if my put hedge is paid off or not, because I still have room to play. Number two, is my put hedge under 100 days? No, it has 186 days left. So it's not depreciating too fast for what I like. And then the third is the put hedge close enough? It's a $20 strike. Is it within 70% of 21.83? And I know that it is without doing the calculations, because it was within 80% when I started trading this last week. So I know that 20 is within 70% of 21.85. So my put hedge, I don't need to do anything with it. Now I also have my long call that I bought last Friday just to kind of cover in case there's some type of takeover bid and LI goes to say $50 overnight. I'll lose all of my put hedge's value. So I buy this little $5 call here just in case. And you could see that this call is up. For some odd reason, that doesn't really make a lot of sense for that call to be up, but it is. I bought it at 5 cents, now it's worth 25 cents. So there must be some volatility going on here. But that's looking good. My hedges look fine. I want to run to the traditional wheel. I'm in at $24. I'm going to try to sell a call at $24. So let's take a look at what I can and can't do. I like to sell here in the near term because I want to get as much premium as possible. This is the premium that will expire on Friday. So I go to the 24. I'm looking at the calls here. I go to 24 and I want to sell. But the thing is, I want to get at least, say, 22 cents, 24 cents. And I can't get it. I can only get 7 cents or 8 cents. I can't get enough premium. It's not worth it for me to sell this strike price here, because if I get called away, I don't really make enough money. I would rather just hold the shares. And so what I'm going to do is add a second layer. So I'm going to sell another put because I can do 2 puts because I own, what is my put hedge? I own 3 hedges, right? There's 3 right here. The fact that I own 3 of these means that I can be long 200 shares and still be covered. So I'm going to sell another put. And where do I want to sell that put? Well, this is worth around $22, so I want to get at least 22 cents. I can't sell the 21 because I'm not going to get enough premium. So I'm going to sell the 21.50. It's just almost right at the money. It's a little bit out of the money, but I'm going to sell the 21.50. I'm not worried too much if the stock, if the market, if this stock goes down, because I have 3 hedges at $20. So if it goes below $20, I'll be in the money. So if I'm selling the 21.50, I'm pretty safe. And then of course, if the market goes up, if this particular stock goes up, I own 100 shares kind of free and clear. So I'm doing good there. So I'm pretty good off. I'm pretty well off with this safe wheel. So I'm going to go ahead and sell one of the 21.50 puts. And it looks like I might be able to get, let's see what the mid price is, $37, 37 cents. I'm just going to do one because I have between $5,000 and $10,000. This is all sized out accordingly. I've already got the system already put together and sized up. So I'm going to look to get 37 cents here at the 21.50 put. I'm going to add layer number 2. Let's see if that fills. Okay, not filling. I'll get 36 maybe. Okay, so I got 36, so I collected another $36. Now I am I could technically go be long 200 shares, but I'm also long 3 puts or 300 shares to protect myself. So that's the trade that I make today. Very easy, basically running the wheel strategy, but adding to it when the opportunity arises. Okay, so that's my trade for the safe wheel. Let's see if there's any comments or questions today. If you guys have any questions about anything about trading options or anything about the safe wheel, just let me know and I'll be sure to answer any questions you have. And Shovel says he's first. He was first today. And Shovel says hit that like button. I appreciate that. Again, I am transparent with my net liquidation and my the way I do it is I have portfolios and I do only one trade in that portfolio. So that portfolio represents the trade system that I do. So therefore it's easy for me to be completely transparent with the certain trade systems that I'm doing, because the only trades that I make in this account, for example, are the safe wheel trades. So you're going to see my account net liquidation right here. When I hit this, you can see my net liquidation. And so you can see exactly how the safe wheel is doing. So it's very transparent, and I share my real P&L and my net liquidation, and my real P&L net liquidation are interchangeable. And I would prefer, and I think a lot of people would prefer, that instructors, if they sell a course or they claim that they make money, that they should share their portfolio P&L. And the best way to get them to do that, one of the best ways, is to, number one, ask them when you go on there, put in their comments, do you believe that instructors should share their P&L? Don't ask them if they should share their P&L. Ask them if they believe that instructors should share their P&L. Don't ask them directly, and then see how your comments might get erased, but I guess that's the risk that you take. But really, if someone's going to be erasing comments, you really don't want to be learning from them anyways. I mean, there are certain times when I erase comments when people make false claims on my channel and make false comments. I'll give them the opportunity to answer my questions as if this is a real claim, go ahead and tell me and prove it to me. But if they don't prove it and they just continue to make false claims, that's one way for me to erase your comment. That's really the only way. Everything else, I just want the truth out there. So if you're going to make a claim on a comment of one of my videos, I'm going to make sure that it's the truth. And if it's not the truth, if I see that you're, trying to push an agenda and lying, well, that's when I pull the plug. But other than that, if you ask an instructor something for real, like what's your P&L, like what's your net liquidation, or how much money do you make trading, and they ban you, that's probably not somebody that you want to learn from. And also, hitting that like button will help promote my channel and help promote what I do and help promote my cause. And if you believe in my cause, then hit that like button. That's what's going to help other people see what I'm doing, and they're going to actually ask their instructors or potential instructor for their P&L. And that's what I want. I want all the instructors to share their P&L. I want legitimacy. And that's what I'm trying to do. So if you hit the like button, that's how you can help. All right, HVAC Mania. Well, Scott said the sound was good. Thank you, Scott, for that. HVAC Mania. I bought puts for GME. Do you think it's going down? Okay, so that's a good question. So the answer to that question is, I don't know. And the other answer to that question is, I don't make decisions based on what I think the direction of an underlying is going to be. For example, I'm trading LI. I don't know if it's going to go up or down, but I have a system that if it goes up, I'm going to be okay. And if it goes down, I'm going to be all right. If it stays the same, I'm going to be okay. And I have a systematized way of compensating regardless of whatever that stock does to where I'm going to make money, especially with a PL5 Pro. And that has to do with trading SPX or /ES. That's the market. I don't know if the market's going to go up. I don't know if it's going to go down. But I do know that if I have an edge and I'm able to exploit that edge, regardless of whether it goes up or down, then I can make money. And that's what I do, and that's how I plan everything out. So I'm a non-directional trader. So when you ask me if GME is going to go up or down, I don't know, and I don't plan for my positions underlyings to go up or down. I plan for them to do either one with my trading systems. Juan says, nice. Okay, Juan, I think you're talking about the fact that I'm up, what, 50, how much am I at? $53,700. I think you're talking about that. Yeah, in a half a year. Yes, thanks, Juan. Leslie Moore says, how often do you skip weeks over the course of earnings edge cycles with earnings edge because there are no good picks? Well, let's say that there's, 12 weeks in a quarter, right? So every quarter we have the earnings. I would say I probably, out of those 12 weeks, I probably trade 8 of them and probably 4 of them get skipped on average, just off the top of my head. I mean, I don't have the numbers off the top of my head, but that's just my estimate. Could be a little higher than 4. That's just my estimate. Steve says, someday we need to get the backstory of the shovel's name. Yes, Shovel. Why are you the shovel? Good question. I'd like to know the answer to that too. Okay. So if you guys have any questions about trading options or anything about the Safe Wheel or any of my systems that I trade, how I trade, why I do what I do, yeah, come to the live stream here and you can ask right here live and I'll answer any and all questions that are reasonable, of course. I mean, sometimes some of the questions have an agenda behind them and some of those are not going to be answered. As long as the agenda is the truth, I'm totally okay with that. But when the agenda is trying to get away from the truth, that's when I have issues. So that's just the way I am. Okay, well, in parting, what I'm going to say here, if the P&L is not real, what else are they trying to conceal? I'll be back next week. I appreciate all you guys.